Hello everyone. In this video we will see what the moving average and exponential moving average represents and some strategies in which we will see how we can generate some profits based on these moving averages. To be able to use these moving averages properly, we need to understand what they represent and what they are used for, and the explanation is as follows. A moving average is calculated by adding the closing prices over a certain number of periods, and then dividing the sum by the total number of periods. Practically, a moving average helps us to identify the trend in general and can offer us from time to time buy and sell points on various intervals. To find these moving averages, we will go into TradingView and look for moving average under the indicators category. We will double-click on the indicator and we will be able to enter the range we want the calculated moving average to be. The moving averages that are used most often are 9, 21, 50 and 200. The more short-term an investor you are, you will use smaller moving averages, and the more long-term an investor you will use higher moving averages. With a moving average we can identify the trend and sometimes it can be taken as support or resistance. Let's add 3 moving averages and color them differently. Every time the moving average overlaps with another moving average, a trend change can be identified. For example, when a moving average that measures fewer candles crosses over a moving average that measures more candles, it is called a golden cross and is a bullish signal, which means that the trend is upward. When a moving average that measures more candles crosses over a moving average that measures fewer candles, it is called a death cross and is a bearish signal, which means that the trend is downward. Now we will look for some entry points and you will be able to see the potential of drawing these simple lines. These examples are just so that we can realize what profits we can reach if we enter and exit the positions almost perfectly. In reality, you will most likely not be able to enter at the minimum and exit at the maximum, but you will still be able to make some considerable profits. As you can see, you can get some profits with these lines if they are used correctly and with other indicators. It can be seen that not every intersection of these lines can bring you profits, because if it were so easy everyone would have made money. These lines can give you an idea about the trend and some possible entry points, but for a higher yield they must be used together with other indicators. We will move on to the EMA and explain a little what is the difference between the two indicators. Exponential moving average compared to moving average gives greater importance to the last candles. We can see on the chart some good entry points that can give you some decent profits. In the next video I will show you some strategies by which you can generate some profits. If you liked this video, don't forget to leave a like and subscribe. I wish you a nice day.